Welcome back, guys, to another roundtable. My name is Adam. With me once again, I have Rizmin and Victor.
Hello.
Hi, everyone.
Thank you so much for joining us. And today we're going to talk about 6 low-risk cash investments in Singapore. So as we know, interest rates are going up and there are many attractive places to park your cash.
Yes.
And one of the reasons why you want to park our cash is basically we also want to wait for opportunities in the stock market.
Yeah.
Right?
Yes.
Because unless you have a dollar cost averaging strategy, most of the time you are waiting for opportunities in the stock market before you invest.
Yeah.
So in the meantime, you'll be wondering where you can put your cash while you're waiting for opportunities. Of course, we have savings accounts and stuff like that. So we're going to explore all the different options in Singapore, what the interest rates, what the yields are like, what the returns are like, and other factors that we need to consider when you want to park your cash. So what factors, before we jump into those options, what kind of factors do you need to take into account?
I think for most people, when they put their money in the bank, usually they will earn a very pathetic interest rate, right? 0.05%. Okay, let's not talk about it.
Yeah.
But the main reason why you put the money in the bank is mainly because it's easy to withdraw, right? As and when you need it, you can just withdraw it, or you can just transfer it to someone else, right? So this is where it actually promotes the best liquidity in terms of access, right? So, and the other one, of course, you also take into account the risk itself, or whether the money that you put in the bank, is it safe for you, because we have heard some Chinese rural banks in China, I think, have actually become a fraud.
Right? Oh wow!
Yeah. So those are the things that I think probably won't happen in Singapore.
Yeah.
But it happens in other countries. So typically, for most cases in developed countries, developed banks are usually more stable. So the risks are actually considered very, very low.
Okay.
Yeah. So the main two considerations is liquidity and the risk of getting your principal back.
All right. So basically, if you want to park your cash somewhere, you want liquidity because you want to take it out straight away.
As and when you need it.
As and when you need it.
Yeah.
And of course, the risk. Basically, you want to put it somewhere safe.
Yeah.
If not,
liquidity is more for like if there's you want to park your cash, but you are not investing because there's no opportunity.
Yeah.
And when opportunity arises, you want to immediately have the cash to invest in those opportunities.
All right. Yeah. Okay. So these are the two things that we're going to take a look at. And of course, the return is of course something that everyone will consider.
Yep.
Yes, yeah.
And we're going to compare the 6 options that we have in Singapore. So we're going to bring up a table right now and compare all the 6 options. And of course, at the very top, we have our savings account, which is basically, I guess, the bread and butter of where you would put your money. But tell us a bit more by default. So I think we're going to go through all the options and what the pros and cons very quickly. Tell us a bit more about that.
Yep. So I think the saving account is the lowest interest rate among all the other instruments, right? The cash instruments, right? So the range is between about 0.05% all the way to 1.2%. Okay, and generally the risk is much lower for saving account, and also there's no fixed amount of lockup period.
Yeah,
you can immediately just take it out.
Immediate liquidity, right?
Yeah,
and there's no limit.
Yeah.
To how much money you can put in, right?
Yep.
Yeah. So there's depends on the saving account. Some there's no minimum balance, but some there's minimum balance. Right. So that's basically your saving account. Then I think the most favorite of most Singaporeans is actually the fixed deposit, where most people will just look at that.
Okay.
So the fixed deposit, right, returns have I think increased recently. So the range is around 2% to 2.3%. Okay, within this range.
Right? At the time of this recording.
At the time of this recording, right. So the setback for fixed deposit is that there's a lockup period, and also there's a minimum to the fixed deposit, right. So depends on the type of banks. There's also 1,000. There's also 500 minimum. But most banks, right, are between 10,000 to 20,000 minimum for the fixed deposit.
Yeah.
Right.
And I mean, the drawback of the fixed deposit is that if you take it out early, you don't enjoy that higher interest rate. It basically becomes almost like a savings account.
And there will be a penalty if you.
The penalty is basically you don't enjoy that higher interest, right?
Yeah. Right. So your lockup period can be between 12 months to as high as 30 months.
Okay.
That is for the fixed deposit.
All right.
Then we move on to the Singapore saving bonds, which is one of the favorite now for most retail investors, right? So the Singapore saving bonds interest compounded basis, right, is about 2.8% if you lock it up for 10 years.
Yeah.
Right. But the good thing about the Singapore saving bonds is that you can take out the money within 1 month. So you notify now, 1 month later, the money will be back to your bank account. So that's the good thing about the Singapore saving bond. But there's still a 1 month period you require. If you need really immediate cash within that month, right?
You got to wait. You got to wait. Okay.
Yeah.
And it's basically risk-free as well.
Yes,
No,
it's
almost.
risk-free. Is backed by guaranteed by the Singapore government.
Okay.
Right, and also I think the minimum investment is just $500.
Yep.
Right, and there's also a max limit of like $200,000.
Okay.
Okay, but it also depends on the amount you can ballot for it also. Right. If you do not want to, you want to immediately take out, I think the closest you can get is actually the Singapore government security bonds, which is the SGS bonds, right? So the SGS bonds range between the yield is about 2.77% to about 3.05% based on the which year you are taking, right? 2 years to 30 years, right? So the highest is actually the 30 years SGS bonds, okay? The minimum sum is about 1,000, right? The good thing is that you can immediately sell the SGS bond or buy the SGS bonds from the open market, right? So that's immediate, okay? But the downside is actually there's price volatility,
Yes.
right? So you may not get back, depends on when you sell. You may get more than your principal or less than your principal.
So that's different from the SGS bond
Yes,
in
correct.
that sense,
But
and from your savings accounts and fixed deposits.
Yes.
Yes.
Yeah.
Yep. But if you were to hold, all the way until maturity,
Yep.
there's no loss on your principal
Yeah.
base, and you still have your interest moving forward.
Okay.
Then you have your Singapore Treasury bill. So the range is about 2.8%, right? And basically it's a zero coupon. So basically they sell you at a discount. You just hold until maturity. Usually it's 6 months to 1 year.
Yep.
Right. Minimum sum is also same as the SGS, which is 1,000. All right. There's no max limit. SGS also there's no max limit for that.
Yep.
Right. Also this one also were affected by price volatility.
So if you want to sell before the 6 months or 1 year, like I need the cash now.
Yeah.
You face that prospect of
Correct.
maybe
Price
making or
volatility,
losing money,
But
right?
you can get it immediately.
You can get it immediately.
Okay. Yeah.
Alright.
So basically, these are all the current cash instrument out there. Okay. And of course, there's a one that we're going to talk about is today is actually the Moomoo Cash Plus.
All right.
Right. So for Moomoo Cash Plus, right, is basically they buy the Fullerton SGD cash fund. Right. We actually the Fullerton SGD the cash fund actually have two, your USD and SGD. Okay. So maybe I think Rusmi want to explain a bit about the Fullerton.
So I think for Fullerton, SGD cash fund is basically where the Moomoo, our friend here, park the money. Okay, so so basically this Fullerton SGD cash fund, they actually invest into short-term deposits. Okay, so this is basically with eligible financial institution, and they typically invest in those institutions that have are rated by the rating agency minimum at least like P2 by Moody or A2 by S&P, which is the investment grade, right? So and they mostly actually invest in those short-term deposit, right, saving deposit that is I would say the bulk of it actually 80% of it actually less than 4 weeks. Okay, so these are the deposit where they invest, okay, and then within 4 weeks they can actually redeem it and they get the principal back plus the interest, right? And this is actually you're investing in funds, right, in the unit trust, right? So this come with also an expense ratio of 0.15%, okay, per annum expense ratio. But of course, at the end of the day, you don't get to see all this because what you see is the NAV that you are buying and selling. Okay, and so far, I think if you look at the past, since inception, 2009, I think the return has been quite. There's no negative return throughout the years. Yeah, so it's been very, very solid. I think mainly because these are all investment mostly in fixed deposit short term, and then they get mostly are all low risk. Okay, so at the end of the day, they will get back their deposit plus the interest, and that's why they will add on to their NAV along the way. Okay, that's why you see it's a very steady return. And the main objective of this fund is, of course, is to provide the return that is comparable to the Singapore dollars saving deposit rate.
Okay.
Yeah, which is now fluctuating at about 2%.
2 to 2.3. So
So
they are still also within that range.
So instead of like putting money in the bank, which may have like penalties, fixed deposit,
penalties,
penalties and all
lock-up
that,
periods,
this fund aims to basically
Gives you the same return,
but
but
more
no fixed up,
more liquidity.
more liquidity.
Yeah,
that-
anytime you can buy.
You can immediately get back the money right when you sell.
Okay. So I think, we want to bring out Moomoo Cash Plus because I think there's an option that, some people may not know about. We know about fixed deposits, SSBs and all that. But when you look at Moomoo Cash Plus, basically it's like a way for you to invest in, like what you're saying, this Fullerton SGD Cash Fund.
Yeah.
They actually have two money market funds in that. One of them is a USD COSP USD money market fund. But we're not going to talk about the USD fund because we're going to compare the SGD funds.
Yes.
So you're saying this Fullerton SGD is basically a fund that invests in short-term bills.
Yes,
bonds.
like your MS bills,
Yeah.
Qatar National Banks. Yeah, so these are all very solid financial institution companies.
Yeah.
Right, so have a good rating.
Yeah, I think it's important to understand because some people might just look at Moomoo Cash Plus and just buy that, not knowing what the underlying instrument is.
Yep.
Yes.
So if you take a look at it, it's actually they're basically buying bills and bonds, which is actually low risk, very low risk in that sense as well. Yeah, and the returns are like you said,
2.14%.
2.14 at the time of this recording.
Yep.
Yeah.
Right, and would you face any price volatility? You would as well, right?
You would, but I think over the course since the inception, the volatility has been very, very low. I think mainly because the underlying instrument they're investing is short-term fixed deposit. So once this mature, like I said, they get their principal back, they get their interest back, and this will just add on to their NAV.
And they reinvest it.
Yeah, and the pricing, you will not go too far off from the NAV itself, right? So this is where I think it has very low volatility. I would say that, the risk is extremely low, okay, but I won't say 100% is risk-free.
Okay, and you mentioned that, since inception, it doesn't really have a negative return on a month. On a yearly or a monthly basis, right?
So since 2009.
So and it's a pretty stable fund in that sense.
Backed
So
by Temasek and NTUC Income.
Yeah, so this is one of those manager is actually set up as they're actually part of the multi-asset management group, okay, and it's basically a holding company that is established by Temasek, okay, so Servira, I can't pronounce the name, but that's the entity.
Okay. So that's the one that's managing this whole thing, and they have a pretty good track record in that sense.
Yeah, long track record, and in fact, a lot of people actually use Fullerton SGD cash fund. They want to get access to the.
So actually, there are other ways to basically invest in this fund, but Moomoo Cash Plus is a very quick way to invest in this fund because if you just go through the app, basically it's like you almost have a same day withdrawal thing.
Yes,
correct.
You can just buy and sell within the same day.
So, right, and you can see the latest yield from the app also.
From the app as well.
Yeah. So if you're an existing Moomoo subscriber like me, okay, I can just simply go to the cash fund and then I can just park my money there and then earn that interest rate, that the saving deposit rate that they are offering now in the market. And anytime, let's say next month I want to cash out, I can just cash out. And then, or when there's a crash, I want to put the money into an investment opportunity, I can straight away transfer out. And then I will just invest in the market.
Compared to fixed deposit.
So there's another option for you to just park your cash. I mean, this is the quickest way I would think that you could basically put your money somewhere and wait for it to earn a return.
Yep.
I mean, it's slow, but it's steady.
It's steady.
And then you take it out.
After all, it's sitting down there, you don't want to put in your saving account. That's the lower interest.
I'm tired of your savings account.
Yeah, I think most people won't bother. If you're just talking about 2% interest rate versus 2.3% interest rate. Most people don't bother. But I think if the quantums get bigger, it matters, right? I mean, 100,000 for 2%, that's going to be $2,000. Okay, it's quite big.
All right, but I mean, I guess at the end of the day, it's about liquidity.
Yeah.
If you're using this money for investments, you want it to be fast because if, like you said, a crash comes, an opportunity happens, you just want to buy that night or that day. Yeah. So you don't want to miss out on that. So anyway, if you have a Moomoo account already, you can just go to your app and then basically subscribe to Moomoo Cash Plus. And if you don't, you can just download the app as well. It's free to download, and then basically you can set up an account with them. And if you're interested in Moomoo Cash Plus, you can just basically go to your app and then you can pick it up and go to Discover, and then you go to Funds, and then there's Cash Plus right there, and basically you can just invest now, and basically you can just subscribe to that if you want to. All right, so pretty easy to do. I've put out my app. It's actually quite straightforward. Actually, quite made it really, really simple. So it's a quick way to gain access to this Fullerton SGD Cash Plus Cash Fund through Moomoo Cash Plus. So anyway, from now till October 31st, Moomoo is giving away a $2 cashback daily if you subscribe $100 into Moomoo Cash Plus. So basically, this SGD Cash Fund that we're talking about, you put in $100, and then Moomoo will basically
give you $60 back.
$60 back. Give you $2 daily for 30 days, which is actually $60 back.
Thank you, buddy.
So this is basically for eligible clients. If you make it has to be a one-time deposit of $100. So there's literally $60 cashback. All right. So of course, Moomoo charges 0 fees when you subscribe or redeem for Moomoo Cash Plus as well. All right. So if you're looking for a flexible way to basically put your money somewhere in the meantime while you're waiting for stock market opportunities
and getting cashbacks,
you can consider subscribing to a money market fund like Moomoo Cash Plus. All right. So you can download the Moomoo app and open an account via this link, fifthperson.com/Moomoo. Do check it out if you haven't had. You don't have a Moomoo account. If you do, check it out as well. Terms and conditions apply. All views expressed in this video are independent opinions of the fifth person, so the three of us. All right, so the information in this video is meant purely for informational purposes. It is not meant for financial advice. And this video has not been reviewed by the Monetary Authority of Singapore. All right, so with that, I think there's a pretty good summary of I guess the 6 options
Yep.
that we have in Singapore. So I think we've already talked a bit about SSBs and SGS in our previous videos. Do check them out as well if you want a more comprehensive deep dive into them. But in this video, we're going to compare the 6 of them, including Moomoo Cash Plus, which is a great way to, flexible way
Yep, to park your money.
to park your money somewhere else. All right, so do check it out if you're Moomoo, if you're interested in that. And of course, I think that's about it, right, guys?
Yep.
All right. So with that, my name is Adam. That is Rusmin. That is Victor.
Thank you.
Thank you so much for joining us. And if you like this video, please hit the like button. Any questions about all these low risk cash investments in Singapore or Moomoo Cash Plus, put them in the comment section. We'll be happy to answer them for you. Of course, subscribe to our channel. Many more roundtables coming up as well. And of course, go to fifthperson.com/Moomoo to download your Moomoo account. And of course, subscribe to Cash Plus and get that $60 cashback for eligible clients. All right, with that, see you around and have a good day.